Pittsburgh, about 9:26 here on Monday morning. I wanted to go through the charts here with the fibo quantum indicator on the 1 hour charts here to show you a couple of opportunities here where I decided to take a couple trades here this morning. So let's just scan through the charts here, and I have the charts zoomed out a little bit so I could see more of the days. So each one of these is a day. As you know, we have the red line is the 13-day moving average. The white line is the 21, and the blue line is the 89-day moving average. Okay. So we like for these to line up red, white, and blue from the bottom up if we take a sell entry, and we like them to be red, white, and blue from the top down if we take a buy entry. However, what I wanted to show you today was, because that's one of the main rules with the fibo quantum indicator, is that you only take trades with the trend, right? But I wanted to show you today was how sometimes you're able to determine, when that trend is about to change, because, when price is moving up, it's not going to keep moving up forever, right? Common sense tells us it's not going to keep moving up forever. And so we're able to determine areas where we can take trades here. And so this morning here in EURJPY, we got a sell signal, right? And if you look here at the time of the sell signal right here on this candle, the trend was still up, okay? But what you see here is, you see that the 13-day had crossed the 21-day on the way down, and they were both getting ready to cross the 89-day as well, which would signal a change in the global trend. Okay, now we're using faster EMAs here. You can use a 20, a 50, and a 200 if you want to. Like I said, I'm using a 13, a 21, and an 89. I'm using Fibonacci sequence numbers. I'm using actually Fibonacci numbers to determine what values to give the exponential moving averages, since we're using the Fibonacci indicator to take the trades, right? So it's a little bit faster, but there's something you could look at if you pull back here. Let me just move this forward again here. So if we pull back here, that's a little bit too far, huh? We can see that the market made a move up. So there's something that was made famous by a guy by the name of Steve Morrow, where he talked about the money market method, okay, and how, I'm sorry, not the money market, the money maker method. And he talks about how the money makers are the ones that actually move the market. These are the people in charge of institutions. These are the people that have all the money they need. They have a lot of resources, so they can move the market in any direction they want at any time. Okay. They don't always get involved, but their job is to make money, and they make money by taking the money off of the retail traders. Okay, so he talks about this. He has a whole course where he explains all the psychology behind the moneymaker method, and he gives you certain trades that you can take. But one of the things he teaches is that the money makers have like a 3-day weekly cycle. So they'll move the market a lot of times in a certain direction 3 days in a row. Now, it could be 3 days in a row. There could be a gap in between there of a day or two, and then it can continue. But it's what he calls a 3-day cycle. So he calls them level 1, level 2, level 3 move. Okay, so you can see here you have a move up, in the market here. There's level 1, there's level 2, and then what happens in level 3 is it sometimes gets choppy like this. Okay, so when you look at this, now if you go a little bit further back here and you look at how the market's moved, see how it makes a move down? Basically, this moves down 1, 2, 3, 4 days, then it chops, and then it reverses, right? Moves up 1, 2 days, chops, right? And now I was looking for a reversal here. So when you look at this, after this chopping motion here, it's moved up 2 days, right? So really, at this point, this particular currency could go either way. To me, you could take a buy entry if you got it, or you could take a sell entry. Now, it just turns out that we got a sell entry in EURJPY. So even though, I don't know why I can't get my charts where I want them, even though the moving averages are not lined up, I decided to take this entry, okay? And you can see here that it immediately moves down to take profit one. And then what do? You get the pullback all the way to entry. And this happens all the time, guys. I've noticed as I looked at the charts over the weekend that this is happening a lot. And, so we're going to have to come up with a different trailing stop method. And as you can see now, this is taking off down toward take profit three right now. Okay. So we're currently up in this trade. If I can grab my cursor here, I got in this trade a little late. We're currently up about 43 pips. I got in this trade a little bit late. See how I missed the sell entry here by about 10 or 11 or 12 pips. And so normally, if you're trading with your live account, you're not going to want to take that trade because now your risk is going to be more than what it should be, right? Because you have to set your initial stop loss up here at the sell stop loss level, right? So, instead of having a risk of 29 pips, I had an initial risk of 40 pips, okay? So because we're using the demo accounts right now, I took the trade. Now, one thing that you could do is you can just put a limit order in right back here in this area around where the sell entry was. And as you can see here, it pulls back and you would get in the trade. Okay. You may not get in exactly at the sell entry, but you can get in a lot closer than I did here. So what we've been seeing is with the Fibonacci indicator and the signals that it's been going off, it's more of a swing. It's more of a swing trade. So it's something that you can get out of in one day if you want to, but if you want to book the larger moves and get those 100, 200, 300, I've even seen some 5, 6, 700 pip moves here when I was doing some back testing over the weekend. Then you have to have a different approach with your trailing stop. So what I've been coming up with here, over the weekend is I came up with a system where when you get to take profit one, you're going to move your stop loss to break even. Okay. If you get to take profit two, you're going to go somewhere in between break even and take profit one. Okay. And then once you get to take profit three, then you can move it all the way to take profit one. And then you can start looking at it more closely to determine if you just want to get out to take profit three, or if you think it can go further and it can develop into more of a swing trade where you hold it, maybe a day or two or even 3 days. Again, because keep in mind, we talked about this 3-day cycle with the market that the money maker does, or the market maker does. So I keep saying it was the market maker strategy, market maker method, right? So we keep talking about this 3-day cycle, and if you can get in right at the change of that cycle, then theoretically you can hold this trade for 3 days and take a big move back down here, right? So, but in order to do that, you have to give it some room. You can't tighten your stops up too tight because then you'll just get stopped out with a gain, but not as big a gain as you could have had. So I hope that makes sense. But anyway, we've been seeing this a lot when I look back at other trades. Most of them do pull back to the break-even point and then they take off. Some of them do come back where you would be at a loss, and then they give you, and then they come back over and go back down again. So we have to work on a new strategy for a trailing stop so that we don't just get these small little gains all the time. There's nothing wrong with the little gains, but what happens is then you take a loss, and the loss is a big loss, and it wipes out all these little small gains that you've had. Right? So even though you're winning 5, 6 trades out of 7 or 8, your losses are bigger than your wins, And so they just completely wipe out all the winning trades that you had. So we have to think about that. But anyway, we took this trade. This trade's working out good. We keep an eye on this. Uh, and once it gets to take profit 3 and beyond, then you can look at it and you can start using price action to determine where to put your stop. You can also you know look to tighten up the stop a little bit at that point. But again, we want to try to take it a little bit longer to get those 200, 300 pip gains. Okay, so that's one trade that we took in that we're in. Okay, now this is UC here. If you look at UC, you see that it's been moving down. It's in a downtrend, and there's no signals right now in there. GJ has no signals, right? Again, this is another one of those currencies where it's moved up over 3 or 4 days in a row. Then it starts to chop. Then it looks like it's getting ready to reverse. So this is one there where if we would get a sell signal, we would probably want to take it, right? We don't have any sell signal right now, but if we would get a sell signal, we would probably want to take it. Okay. This is NJ. Now NJ is a little bit different here in where it was actually at when the sell signal went off. So NJ is another one that's moved up, right? You see it's moved up here, 1, 2, pulled back a little bit, but still closed, moved higher, right? It's moved up 3, 4 days in a row, and it's looking like that it's getting ready to either reverse or it can chop and move higher, right? Now, when we look at this particular one, the sell signal here set up above the 89-day moving average. So although we do get a cross here, the 13 crosses the 21 on the way down, and this particular currency looks like it's due to reverse, right? But since this sell entry is above the 89-day moving average, and what happens at the 89-day? Sometimes, right, it finds support as it's moving up. It'll find support at the 89-day, like right here. Okay, so that can happen again. So when you do try to predict when these currencies may be changing direction, you want to have that sell entry. If you think it's going to move down, you want to have that sell entry below the 89-day moving average, like it was here in EURJPY. See, the sell entry set up below the moving average, not above it. Okay, so and that enabled us to take the trade. And then we also have another trade here, if I'm not mistaken. Let me see here. Where was I at? GJ, NJ. So we didn't take this trade. This was a sell entry, right? It was a sell entry. It would have been against the trend, right? But we are looking for the trend to reverse in NZDJPY. But because the sell entry was above the 89-day moving average, I didn't take this one, okay? And as you see, it's kind of chopping along here, and it's kind of finding support at that 89-day moving average. So that told me to stay out of this one, okay? Look at GU here. Again, you got all these currencies that have moved up all last week. And so you're going to look for them to either chop, right? And then maybe continue up or reverse and go down, or they may just reverse right away and go to the downside. So we need to see what kind of signal comes up next here. But I have these kind of zoomed out so you can see how the currency moved up, it chopped, and then it reversed, right? Moved down, chop, move down again. Sometimes the 3-day cycle goes right in a row. Sometimes there's a day or two in between where it just chops and then it continues down. So here, if we're thinking about Steve Morrow and his market maker method strategy, that would be level 1. That would be a level 1 move down, and this would be a level 2 move down. Okay. And after you get to level 3, that's where you could get a reversal or you can get chopping in the market, and the market maker can decide to continue down. You know, it all matters where the opportunity is for him to take the most money off of the retail traders. Okay. And I'm going to explain. I actually got up if you use Steve Morrow's market maker method, he shows you how to take trades on the 15-minute chart. I don't usually like to trade on the 15-minute chart, as you know. And also, the time of day is most important with the market maker method. And the opportunities usually present themselves right at the London Open. And of course, I'm in Pittsburgh, Pennsylvania, so that's about 3 o'clock in the morning, so I'm usually sleeping. But I did get up this morning at 3 o'clock in the morning to see if I can find an example of the trade. I was able to find an example right away. The second chart that I opened up, I took that trade, although I did doze back off and I was a little bit late getting in that trade, but I took it on the demo account. I posted the image in the group so that you can see it. And I'll talk about it a little bit here before I get off. But let me just continue with what we're doing with the Fibo quantum indicator here. We're just scanning through. And again, there's no signals here. This is AUD, USD. Again, this is another currency that moved up, all last week. If you're thinking about the levels, you definitely have 3 levels here. This would be the level 3 where it chops. And more than likely, it's in a strong uptrend. You can look for this to possibly reverse and start moving down. So if you get a sell signal in this, and the sell signal sets up below the 89-day moving average, you can consider taking that and getting into the trend change early. So you're actually, at that point, trading against the trend, right? But what we have to remember is there's a retail trader trend and there's a market maker trend, okay? So you have to remember that. And so that's what you can do with this. This is NZD USD. Again, this made a strong move up all week, right? Level 1, level 2. Now we're in level 3 chop right here. And again, we could look to this to reverse, or it could decide to keep moving upward. Okay. This is another one right here, AUD, JPY. I believe this one gave a sell entry also. But again, here, let's see what we got here. Again, this is another one that's moved up. If we go back, we see last week it moved up 1, 2, 3, 4 days in a row. Then it chopped. Okay, so we could look for this again to go either way, right? The market's not going to keep moving up forever, right? And the market maker, as we talked about, they move it up in a 3-day cycle. Okay, could be 3 days in a row. There could be days in between where the market just chops, doesn't really move in one particular direction, and then it continues. But I would look for this to reverse. However, at the time of the reversal here, where we get the sell signal right here, right? The sell signal sets up way above the 89-day moving average. So I didn't take this trade. I wouldn't take this trade because the price is still way above the 89-day moving average. So, the market may need to chop a little bit more and then give a sell entry signal, and we'll be in a better position to take the trade. Now, CAD-JPY, on the other hand, did the same thing, right? Look, moved up all last week, and then look at the chop. This is what you call a level 3 chop here, okay? Here you look for this to reverse on the way down. If you can get in right at that point of reversal, you're actually taking a trade against the trend at that point. So you're not trading with the retail traders. You're taking a trade on what is now going to become the market maker trend, okay? So if you look at this trade here, we got in this trade. Again, we got in a little bit late, but we decided to take this trade even though, the 13-day and the 21-day were not below the 89-day at that point, I felt that this currency was getting ready to reverse because of the move up that it made last week in the chop here, right? And price and the sell entry was below the 89-day moving average. Okay, so we took this trade, we got in a little bit late, and we're currently up here a little bit. So hopefully this turns out to be a good trade as well. Again, we took the trade here, our stop loss is up here. Once we get the move to take profit one, we will move the stop loss to break even. Once it moves to two, we'll move it halfway between break even and one. And once it moves to three, we'll move it to take profit one, and we'll start watching it a lot closely. Okay. Now, if we were using, that's because we're on demo, right? If we were using our live account, what we might want to do is when it gets to take profit one, we might want to sell half our position, take profit on half the position, and then move the remaining position to break even. So now we've got some profit because we're using our live account, right? We got some profit that we banked, and we have no more risk in the trade. Okay. But since we're on demo, we're not going to sell half the position. We're just going to let them run. Okay, GBP NZD. This was that trade that we lost on Friday. If you remember, we got out of it with a loss, and it actually now is starting to move up. So again, if you look at this, you have a level 1, a level 2, level 3 chop here, and now it looks like that this is getting ready to reverse, and we're actually looking for a buy signal here. Okay, and again, that buy signal may come before both the faster moving averages cross the slower one, but we may be able to get in early and make more money on the trend change, right? AUD NZD is right here, and then CHF JPY. So no signals there. Now, what I wanted to show you real quick was on EUR USD this morning, I got up at 3 in the morning, and on the hourly chart, I seen this big spike candle right here with a big move up. So again, we just talked briefly about the market maker method that Steve Morrow came up with and did training videos on, made a ton of money on. And I'm not using that strategy, guys. I just want to, but I wanted to give you the information on looking at the 3-day cycle that he talks about in the trading. And just to validate, I wanted to show you one of his trades that I just found real quickly. I woke up at 3 o'clock this morning. Basically, what the market maker will do is he'll entice traders to take trades. He'll move the market in such a way to entice traders to take trades, to accumulate more money, right? And then he'll move it away from them quickly so that they lose their money. So this area right here is the Asian session. And so it usually moves in a tight range like this, okay? And then in this Asian session, you'll get a lot of people trading, and they'll put like, they'll want to get in the market long if it moves above that range, or they'll want to go short if it goes below that range. Also, the people that are going short will put their stop loss right up above the top of the range, okay? So what the market maker does is he makes a quick move here. It's usually like a 3-candle burst, and we're on the 15-minute chart to see this, okay, which I don't like to trade on. But he'll make this 3-candle burst here. Sometimes the 3 candles are right in a row like they were here. Sometimes there's some candles in between, okay? But he'll make this burst up. He has the money. He can move the market however he wants to move it, right? I say he. It could be a woman. It could be a group of people. I'm just using he to make it easier. So, he's going to move the market in any direction he wants. Now, he can only move it so far, right? He can't collapse the economy. And usually they're limited to the average daily range. So that's usually 150, 200 pips a day that they can move the market in a particular direction. But what they'll do is they'll make a false move in one direction because that's the way the trend was going, right? If you look at this particular currency here, it made a move up, right? Let's see if we can go back a little further. See, this one, it made a move up here, right? Consolidated, pulled back, then made a move, second move up, and then you have this chopping action. So this would be level 1, this would be level 2. So this is a little bit different where the three levels don't present themselves right in a row as 1, 2, 3 days. Here it moves up one day, consolidates, moves down a day and a half, makes a second move up, and then consolidates again. So what he does is here, since the retail trend is up, and what most retail traders do is they'll buy on a pullback, he makes this false move up here to entice traders to go long, right? Plus, he picks up all these orders that were in here as well, and this is called a stop hunt. What he's doing is he's taking out all the stops of the people that are currently going short, right? So he takes them all out, and he entices a bunch more traders to go long. Then what he does is he pulls off of that high that he creates, and he'll usually run this in a range here for like 30 to 90 minutes. So on the 15-minute chart, it's like 2 to 6 bars, right? So normally he'll make a second pass back up, but he won't take out that initial high. Sometimes though, he does. See how this pin goes up a little bit higher. As long as the candle doesn't close above that initial high mark set by this candle here, it's usually okay. So he throws that pin up there a little bit further, and the reason he does that is because there's either stop losses up there, right? He either has more stops that he wants to take out of the people that are shorting the market, or there's more money in there where people put orders in to go long. So he throws that wick up there a little bit further to catch all those orders, and then he pulls away right away. See, sorry about your money, but he pulls away right away, and he takes the market in the direction he intended to take it all along. Okay, so I got up this morning at 3 a.m. I took this trade, but I dozed back off and I got in late. So actually, here you'd want to get in to this trade somewhere on this candle as it starts to move down. Okay, I didn't get into this candle here, so I ended up getting like 30 some pips. But as you can see here, this is probably going to be what's called a peak formation high, and that's probably going to be the high for the week. And more than likely, the market maker is going to move this currency down over the next 2 or 3 days, and you can use that information to make money, because you know then using the fibo quantum indicator, if you get sell entries, you're going to want to take them, right? Now, so that's what he's doing here. Now, see, that's moved down 64 pips. So the way Steve Morrow teaches this strategy is you want to get your 50 pips and get out. So you're only in trades for like maybe just 30 minutes or maybe a couple hours, but you're not in trades very long, and you're using the 15-minute chart, which I don't like to do. But I just wanted to show you this because I literally got up at 3 this morning, and in 5 minutes I found this setup right here where the market maker made a false move up to entice more people to get in, took out all the stops of the people that had it right and were going short, right? He took all those stops out. He enticed everyone to take new positions long, and then he took it all away from them. Okay, and this is what they do. They make these false moves. In this case, they make the false move up, and then they drop it down. Now, what he might do is this: there's also a trade that he takes, which is called the New York City reversal, right? When the New York market's open. But we're not going to go into that. But anyway, now tomorrow this may trade in this area here, and then at the open of the London session tomorrow, he may make another false move up and then take it back down. Or if he has all the money he needs, he'll just continue moving this down away from all these people that are trapped. right? They're trapped. They're all trapped up here because they took all these long positions right when he moved it away. So anyway, I just wanted to show you that real fast, but we're taking trades, like I said, on the 1 hour chart using the fibo quantum indicator. And as you can see here, we're in two winning trades right now, EURJPY and CADJPY. So I'll be keeping an eye on them. If there's any updates I need to make you aware of, I'll come back on here. I'm sorry if I got off topic a little bit talking about the market maker method, but I wanted to use that information to try to explain to you how there is a way to determine when that trend is going to change, and you can take the trades even though you haven't gotten the confirmation. So I'll be back on tonight at 7 p.m. Until then, have a great day.